Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from October 14th to October 18th, 2024. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from October 14th to October 18th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. On Tuesday, October 15th, we start with important data from the UK, including employment change and unemployment rate for August. The Eurozone will release industrial production data for August. In North America, we have the New York Empire State Manufacturing Index from the US and inflation data from Canada. New Zealand will end the day with its Q3 inflation rate, and Japan will release machinery orders data. Wednesday, October 16th, brings us UK inflation data for September, which will be closely watched by the market. Later in the day, we have ECB President Lagarde's speech, which could provide insights into the ECB's monetary policy stance. Japan will conclude the day with its balance of trade, exports, and imports data for September. Thursday, October 17th, is packed with high-impact events. Australia starts with its employment data for September. The ECB will announce its interest rate decision, followed by a press conference. The US will release several important indicators, including the Philadelphia Fed Manufacturing Index, retail sales, and initial jobless claims. Japan will end the day with its inflation rate data for September. We'll conclude the week on Friday, October 18th, with UK retail sales data for September. The US will release housing starts and building permits data for September. Key events to watch this week include UK employment and inflation data, Canadian inflation figures, ECB interest rate decision and press conference, US retail sales and manufacturing indices, Australian and Japanese employment and inflation data. These events are likely to cause significant market movements. For our technical analysis this week, let's focus on Euro to US dollar and Australian dollar to US dollar, as both pairs have significant events later in the week that could influence their movements. Looking at the daily chart, Euro to US dollar has been in a downtrend since last 2 weeks, with the pair recently breaking below a significant support level. The price is currently trading well below the 20-day moving average, the red line on the chart, indicating strong bearish momentum in the short term. Key levels to watch are support at 1.0791 and 1.0679 and resistance at 1.0999 and 1.1109. The pair is currently moving towards the 1.0791 support level. If this level breaks, we could see further downside towards 1.0679. On the upside, the 1.0999 resistance level seems to be a significant barrier, coinciding with the recent swing high in the 20-day moving average. The stochastic oscillator at the bottom of the chart is showing oversold conditions, suggesting that we might see a potential bounce or consolidation in the near term. However, given the strong downtrend, any rallies might be seen as selling opportunities unless we see a clear break above the 1.0999 resistance. Traders should pay close attention to ECB President Lagarde's speech on Wednesday and the ECB's decision on Thursday. Any hints of a dovish shift in monetary policy could exacerbate the current downtrend, while unexpectedly hawkish comments might trigger a relief rally. Now, let's turn our attention to Australian dollar to US dollar. This pair will be influenced by crucial Australian employment data coming out on Thursday, including the employment change, unemployment rate, and full-time employment change for September. Looking at the daily chart, Australian dollar to US dollar has been in a corrective phase since late September, following a strong uptrend that began in early July. The pair is currently trading below the 20-day moving average, the red line on the chart, suggesting short-term bearish pressure. Key levels to watch are support at 0.6636 and 0.6517 and resistance at 0.6815 and 0.6936. The pair is currently consolidating between the first support and resistance levels. The stochastic oscillator at the bottom of the chart is showing a potential bullish crossover in oversold territory. This suggests we might see a bounce in the near term. However, given the recent downward momentum, any rallies might face resistance around the 0.6815 level. Traders should pay close attention to Thursday's Australian job data. Strong employment figures could provide the catalyst for a move towards the resistance, while disappointing data might push the pair towards the support level. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.